What underappreciated bullish indicators do you see in the world right now?
I think the biggest thing that's underappreciated right now is we have low inflation, low interest rates, low unemployment, economic growth. That's a great environment for stocks, but people are afraid of that. People don't fully think of that as a time to want to own stocks. And so what that's created is a gap between reality and expectations, which at the end of the day influences future stock prices. So we think the economic reality is right up here, but expectations is way below it. And so as expectations move up to reality, that should push stock prices up. And I don't think enough people fully appreciate that phenomenon.
A lot of times all you have to do is flip these things around. When we were talking earlier about concerns over slowing global growth, and one of the things that people have really focused in on is manufacturing, well, just flip it around. The other side of that coin is services. And as it turns out, particularly in the developed world, and this is true in the United States, but it's also very true in Europe, services dominates the economy. It's much more a service-oriented economy than it is manufacturing. Those statistics have been really quite strong in keeping the global economy moving forward, and it's been one of the key reasons why growth has continued, that despite the weakness in manufacturing, the bigger part of the global developed economy, which is services, have been growing very nicely.
And as we've said throughout this capital markets update, people don't appreciate how normal these times are. And a lot of the things that are happening in the economy, or a lot of the things that are happening in the stock market, are very normal for where we are in the last third of a bull market. That's an exceptionally bullish feature, to have people see the normal stuff as something that might scare them, but it's normal.
One common theme to all of this, I think, is that sentiment is very low. With all of these things, you see a lot of worry about small issues and not enough attention on big positive issues. I mean, whether it's related to trade and people paying attention to the US-China trade issues, but not to the other free trade agreements that are signed. Whether it's people worrying about politics without recognizing there's a lot of gridlock today, worrying about manufacturing and ignoring services, which is the bigger part of the global economy. There's just a lot of worry out there generally. And what that means going forward is there's a lot of room for sentiment to keep improving. What that means is we're a long way from some type of overly optimistic or euphoric environment, which would indeed be very worrisome. That's a typical way that a bull market ends, is too much excitement amongst investors. They inevitably are disappointed. That weighs on equities. Right now we're in an environment where sentiment is very low. People are very worried about a lot of things, too much so, we would argue, and they're not fully appreciating all the positives out there. And so as they gain a greater appreciation for the economic stability and the positives in the world, that sentiment ought to improve going forward. That gets them more interested in owning stocks. That benefits stock prices. That allows the bull market to continue. Eventually, you can get to a point where excessive optimism or euphoria means that things are getting precarious and maybe there's a bear market coming. But I would say we're a long way from there now. And everything that we're saying here reflects a very dour sentiment picture today.
And for views on current events in the world of investing, visit marketminder.com. Updated daily, it offers on-demand access to Fisher Investments' most current thoughts on capital markets and the global economy, as well as our sometimes irreverent commentary. We hope you will enjoy it.